From Donald Trump's tariff threats to Apple's investment moves and record highs on the ASX, markets are moving fast ahead of key central bank decisions. Joining us now is Chris Weston, Head of Research at Pepperstone. Great to see you, sir, and great to have you back on Ticker. Now, what impact could Donald Trump's 100% tariff on semiconductors have?
I don't think it's going to have a huge impact, to be honest. I mean, I think markets have been fairly desensitised about sort of reacting to tariff news for a while. I mean, again, this is really aimed at those companies that are in bringing or buying the chips overseas and then bringing them back in. I mean, if you're going down the sort of route of Apple, which was talked about, obviously the talk of the town last night, if you're producing the chips or buying the chips from a US producer inside, then obviously you're not going to get that 100% tariff. So again, this is just really aimed at Donald Trump's idea about trying to get companies to build in America, and that's where it's going to go. But I mean, obviously, if we were talking about China coming out and retaliate on the back of this, and then the likes of Nvidia and all these, AMD and the export chip companies from the US, then that would probably be a bigger concern. So obviously, we are watching as we go into the deadline with the US, with China, just to see if there would be any kind of retaliation on the back of this. It's not specifically aimed at China, so that's obviously something to bear in mind. But I think if we were talking about tariffs on the export side of things, then I think we'd see a much bigger reaction than we're seeing today.
Talk to us about Apple, how they're positioning themselves amongst all of the uncertainty, because they're wide open. They've got the China, they've got the India, they've got President Trump on their back about building more in the United States, yet investors responding pretty positively to another $100 billion spend on bringing manufacturing back to the US. That's almost unheard of. Investors, we thought, wanted it to all ship offshore. Is that the power of Trump?
Well, you could say that. I mean, Tim Cook's come out and delivered when he went into the White House, into the Oval Office today. He's given him a real-life statue made of 24-hour carat gold. A bit disgusting, to be honest. But, I think what we were seeing there is the Trump effect. And, I think if you look at the price action we've seen in Apple in the last few months, it's been trading in a fairly tight range. It's been trading as a utility. It's massively underperformed some of the other semis and the AI play, but it's firmly broken out now. And I think they'd already committed to $500 billion worth of investment into the US, and now they've increased it by another $100 billion. And they're going to be making a lot of the various components like glass and creating their own energy within the US, and that's a commitment that Donald Trump wants to see. And of course, why investors are really looking at this one very closely is because as a result of this, the tariffs that Apple are going to face in the US are going to be significantly lower, if not 0%. And I think obviously that's going to impact the bottom line. So you're talking about a stock here, which everyone was talking about a 2027 story. They haven't really got the AI side of things anywhere down pat as a lot of the other companies. But now it's outperforming, and we're seeing significant gains. A company that was supposed to be considered a utility stock, having a 5-6% move in the cash, and it's up another 2.5% after hours. The question now, can this kick? Obviously, they've got Donald Trump inside, and I think there's a bit of a battle at the moment between Tim Cook and Jensen Huang of Nvidia to become the best friend of Donald Trump. I think Tim Cook's done himself a lot of favours in that regard last night.
Well, I mean, look, France gave the United States the Statue of Liberty. Now it's the Statue of Trump to get on side,
exactly,
right? We're not getting far away from history here. Let's bring it back to the ASX. What's behind it hitting all-time highs?
Well, look, I think you look at global equity markets, the major DM ones, and we hit an all-time high yesterday. We're going to open higher again this morning, and we are the pillar of strength at the moment. I mean, I think you've got discretionary stocks which are blowing up at the moment. They're looking really good. We know next week the RBA are almost certainly going to cut rates. We're going to expect another three in total by the end of this year, and that's obviously helping those discretionary names. Banks are pretty solid. I mean, CBA are going to be reporting next week, and that's not any kind of reflection of economic or earnings reality. It's more to do with superannuation funds having a scarcity of assets and having to go in there, and also the ETF rebalancing, buying a disproportionate amount of CBAs every day because it's 11% of the various ETF baskets that track the ASX. But you've got a market that also is seen as a bit of a safe haven in some regards. We're a value market. We've got the lowest tariff rates in the world at 10%. Not that it's going to affect us as badly as some of the other countries. So we're a bit of a safe harbour with a very, very strong banking space, very, very strong and good liquidity, and very well capitalised. So it's a safe harbour away from the madness of tariffs and all the other kind of craziness that's going on. very safe and predictable earning streams, but you've got momentum playing through in financials. Materials doing okay, but yeah, discretionary names are absolutely killing it at the moment.
All right, Chris Weston, Pepperstone, appreciate your time. Thank you.
Good on you, mate. Thank you very much for having me on.